Welcome to today's Research Business Daily Report, where we're going to take a look at where venture capital money is being directed this year in research circles. And then the Indian government expresses its dissatisfaction with the country's new TV rating service. And finally, the metric for Twitter that the Wall Street community would like to see it adopt and stick with. RBDR is sponsored today and this week by Decision Analyst, helping companies build stronger brands through marketing mix modeling. We will refer you to a link at the end of today's report that can give you the very latest insider look at marketing mix modeling. 2 weeks ago, when I guested on Paul Kirsch's Boss Academy program, he asked me which area of research has been gathering the most venture capital funding so far this year, and I guessed that it has remained where VC funds have been going in recent years, specifically at data analytics companies. Well, CNBC.com's Harriet Taylor reported late last week that, quote, for startups in the business of crunching data, there has never been a better time to raise capital, end of quote. Having the potential to be both substantially disruptive as well as extremely profitable, these data analytics companies are applying data mining and analysis in new ways and new industries. That came from PitchBook's VP Adley Bowden. And they operate in industries that, according to Bowden, have not yet fully realized the value of big data. And he named two of them, healthcare and financial services. The pack of companies in those areas that have raked in the most investment so far this year include Oscar Insurance, Flatiron Health, both of those are in the healthcare business, LendUp, which is in the financial tech sector, and Domo in the enterprise area. Other companies, some of which you may have heard of that are getting funding this year of note, include Lyft, Magic Leap, Snapchat, Jawbone, and DoorDash. Moving on, we follow the change and affiliated disruption in the last couple of years in India's television rating system as TAM Media Research, which was run by Nielsen and Kantar, was ushered out, and BARC or BARC replaced those longtime media data providers. Well, things are not going that well so far, at least according to the government of India, which said last week it is not happy so far with the new TV rating system. Quoting, TV ratings must become more reasonable and fair. I've publicly disapproved of TAM Media Research when I was I&B minister, and whatever alternative it has come, I have not impressed by that, so stated Ravi Shankar Prasad of India's telecom minister area. Prasad said BARC is not very reliable, and he asked how a few hundred boxes, actually there are 34,000 meters out there now, can determine which programs are better in a country the size of India. And he also called for a better mechanism so that the real content can drive quality programming. In response, BARC India CEO Partho Dasgupta told India's TelevisionPost.com that it has doubled the sample homes in the first year of BARC than existed before, and it will be expanding those numbers. He also said that India's industry has agreed so far on the number of meters to be used at this early stage. And finally, SeekingAlpha.com published an interesting analysis of Twitter that zeroes in on its Periscope live streaming video capability. And Stone Fox Capital, which is looking at this all, says from a Wall Street perspective, Twitter needs to focus on the time watched metric. It reflects on usage amount versus level of users, but Stone says that it is a metric that needs to become locked in if they want to impress Wall Street over at Twitter. That's your Research Business Daily Report, where we've been sponsored by Decision Analyst, helping companies build stronger brands through market mix modeling. You're invited to read Decision Analyst President Jerry Thomas's article on the subject, and we have linked to it in today's subscriber email as well as in the description box, which is directly underneath today's RBDR. Even if you are particularly well versed about market mix modeling, well, you could potentially benefit from this refresher and updater. So take a look at it, one and all. Again, the link is in today's video. Have a great research day, and we will look forward to seeing you back here with us tomorrow.